Hey guys, what is up? It's your boy Vajalarazzi here. I'm sorry for the lack of uploads over the last couple weeks. I've been extremely busy with some things. I'm currently working on revising this channel as well as starting my own business, so I've been allocating quite a bit of time to that over the last week or so. I was also recently in Las Vegas visiting a friend, so I've had quite a bit going on, so I apologize for the lack of uploading. You guys can expect more in the future, but I don't know how accurate or how strict my schedule is going to be over the next little while due to the fact that I am working on starting my own business. So with that being said, let's dive right into this so I can give you guys a Bitcoin update and where I'm expecting moving forward. Taking a look at the 8-hour time frame, last update we were right about here, and I explained how this reminded me of a rising wedge that we also had back up here, and in fact that's exactly what happened. However, it was a little bit more impulsive than I thought. I didn't quite think the prices were going to go up this high. However, we ended up getting a decent little rally up through here. We ended up breaking through my first resistance zone and claimed that as support. And then we got strongly rejected off of my second one. And because of the severity of this sell-off, I'm not leaning towards any sort of a bullish case. I think that we could see a little bit of a bounce back up here, but I do expect it to get rejected off of this resistance box that I have drawn here. And I'll actually drag this out a little bit. So if we do get a bounce right in here, I expect it to get rejected at about 6,800 to about 6,900. Somewhere in that area would be a good target for a short if you are looking to short. But I mean, overall, the market is still just kind of behaving into this downtrend, especially with the severity of this sell-off. It really doesn't look like the bulls are going to be able to push this back up very much. Maybe we get a retest, but I don't think that that's going to be very impulsive. I think it'll be fairly short-lived, and then we'll see more downside. But as you can see, we finished out the retrace into the 4 wave, and we're now working on the 5. I expect this to bounce up, and then this will create our first wave before we end up breaking support here. If you're wondering what this black line is, this is indicated as my support zone. I drew it on the daily, so it's not lining up perfectly with this, but just so you guys know. Next, we're going to be taking a look at the bigger time frame and kind of show you guys what I'm expecting with that side of things. Taking a look at the daily time frame, I want to point out something that's been happening. So basically throughout the entire length of this bear market, well, for the last 8 months anyways, we've been more or less just trending sideways. However, in that time, we continue to paint lower highs, lower highs, lower highs, and now we have another lower high. Now, all of these lower highs are indicative that we are still in a bear market. So I see a lot of people on Twitter, I see a lot of people on YouTube, wherever it may be. A lot of these crypto analysts just for some reason think that that Bitcoin's just going to go up. But you guys have to understand that in a market where we're painting lower highs consistently, what is it that's telling us it's going to go up? There isn't anything. Based off, trading is a game of probabilities, and if the market is showing us lower highs, then that's literally the definition of a downtrending market. I'm not saying that it's impossible that we bounce out of this and do go bullish. That is a possibility, but the probabilities are more in favor of the bearish scenario due to the fact that we are in a bear trend right now. So whoever's trying to say that this is bullish, I just can't agree with that. I expect us to see another lower low from here. One thing that people always say for some reason, and it's whenever they're trying to attach a bias towards their perspective of the market, a lot of people are saying, since we've held support basically at the 6,000 mark and we've bounced off it 4 or 5 times, that is a bullish scenario, when in fact that's actually not true. The more that price stays at a certain area and the more times price reacts to that area, whether it's bouncing off of it or whatever it may be, that shows that there's a weakness and that trend is slowly going to weaken more and more. So every time we bounce off of this, the shorts stack higher and higher, and that's why we're seeing these lower highs. There's less and less buyers that are able to push the prices back up, and so we're just kind of stuck at this zone. Now, because of the fact we haven't broke through this zone, it shows that there are enough bulls that are able to maintain the prices up here, but the fact that we keep painting lower highs shows that even though the bulls and the bears are at this strong battleground, the bears can't necessarily break below the 6K mark, but the bulls can't seem to break and make a higher low at the same time. So this, in the market right now, this is a very decisive point. We're waiting to see which side is going to assert the market dominance, and to be completely honest, I'm leaning more to the bearish perspective because of the fact these lower highs just continue to form, and there's really nothing showing us that that's going to change anytime soon. So this is what I'm expecting moving forward. I expect us to continue to retrace into our 5 wave, which could take us, my original targets, and you guys know this, are 5,200 to about 4,800. That's going to be my targets for when we get a strong bounce up and out of there. However, I want to keep you guys notified. If it goes lower than that, understand and have a plan ready for that. I'm still going to have my buy order set there. So even if it goes a little bit lower than I'm expecting, I'm still accumulating throughout this dip. Don't get scared out if it goes a little bit lower than your initial targets. That's something that happens. Just develop a plan and be ready for that scenario if it does decide to play out. So this is how I'm going to be playing the market. For the next retrace, I would think the lowest target I think it would go to would be about, we have strong support at about 3,000. So this is an area of strong support right at 3,000. As far as this retrace and the bear market in general, I just do not see Bitcoin being able to break below this $3,000 barrier. I expect that if we have a strong sell-off, stronger than I'm currently expecting now, I think that prices will go no lower than 3,000. But you guys know where my bids are set, and that is from 5,200 to 4,800. I have a plan in case prices go lower than that, and I'll just continue to accumulate in $200 increments all the way down to 3,000. So this is how I'm going to be playing it for the upcoming future. Like I said, sellers seem to be gaining control. We're just at this indecisive point where the buyers and sellers are fighting. No side is really winning too severe one way or the other, but I do expect us to have a little bit of a bounce and then the sellers drag us back down. But there's one other thing that I wanted to talk about before I end this video, and that is, where do we stack up in this market cycle compared to previous bear market cycles? Where is the eventual bottom, and how can we calculate that? Now, the best way that I found to calculate this is just go from the highest point of the market cycle and then go to the lowest. So I'm going to zoom in here, make sure I'm accurate at it, and mark the all-time high right there. So let's see how far we are down from all-time high numbers. We are currently sitting at about 68% loss, and I'm charting from Bitfinex, so it might be a little bit different if you go and use a different chart, but based off of Bitfinex, we are currently down 68% from all-time high. Now, if you go and analyze previous Bitcoin bear markets, we'll actually go through here and do that right now. So this was basically the first big rally inside of Bitcoin. Now, these are Mt. Gox charts. I don't know if a lot of you guys have ever seen these, but these are really interesting. These show the entire price history of Bitcoin. So you can kind of see some of the original bubbles that started this hype cycle that we're currently riding in. So this was really the first major bubble that happened. And from all-time highs of this bubble, we saw about a 93% retrace to the bottom. So keep in mind, this was at a time when Bitcoin's volume was very, very low. Like, this would have been about the size of a typical altcoin, probably not even in the top 100. So this was a very long time ago. And in these very new market cycles, the bubbles get very drastic one way or the other. So a 93% retrace isn't going to be as likely in this next bear market that we're currently riding in. So let's go take a look and see the second bubble that happened and see if we can compare similarities between the two. Now, take from the high of the move to the low, and we had about an 80% sell-off, maybe 81% sell-off here. So as you can see, as the bubble progresses, the sell-offs become less and less severe. And then that puts us towards the Mt. Gox hack, and that chart is unusable, so we'll come back down. So we'll actually just leave this. So as you can see, the bubbles are becoming less and less drastic one way or the other. The sells aren't quite as severe. And so that's a good sign overall. That just shows that the market is maturing as a whole, and it's not as likely that we're going to continue to see these huge sell-offs. Now, the third and final bubble that has happened before the eventual rally to 20K, we saw a significant loss of, from all-time high to capitulation, we saw about an 86% bubble. So this one here, the third bubble, was actually more severe than the second one over here. But the thing about that, guys, you also had some different things coming on that happened over here. You had the Mt. Gox hack, and this ended up creating this prolonged bear market. At the time, we didn't have a ton of liquidity, so it was hard to buy and sell. Nobody even knew what Bitcoin was. So there was a couple different factors that came into play with the previous bear market cycle. And so I'm expecting that this current cycle we're in, I don't know if we're going to be able to get a full 80% retrace. I don't think it's likely that we go much over 80% if we do end up falling that low, just because of the fact, think about how much Bitcoin has matured in this time. I mean, from the bottom of this cycle, I got into Bitcoin. Yeah, you can actually see my entry here. I got into Bitcoin right here at about $450 before we broke out of this ascending triangle. This was actually for a different chart that I was doing. But basically, guys, I don't think it's likely that we're going to see this same sort of capitulation that we did in this previous markets, due to the fact that at this time in the market cycle, Bitcoin only had about a $3 to $8 billion in market cap. The whole rally to 8K, or the whole rally to 20K, ended up bringing a total of about $850 billion to market cap. Bitcoin obviously didn't have the entirety of that, but there was still a huge monumental increase from the original $3 to $8 billion in market cap. So with this bear market that we're currently sitting in, I just find it unlikely that we're going to see the same severity of a sell-off. And there's a few different reasons for this. One is just we have bigger liquidity, and what history has shown us that the more liquidity in a market, the less severe the sell-offs are going to be. So we're currently sitting at about a 68% sell-off. Now, an 80% sell-off would put us at about, let's see here, 80% sell-off puts us at about 3,900. So just under 4,000 would be an 80% correction. And guys, I don't think that this is out of the realms of possibility. In fact, you could lean that this is a more probable scenario due to the fact that every previous bubble we've ever had inside of Bitcoin has produced at least an 80% retrace, one being even 93%. So as you can see, we're getting close to that point. We're getting close to the deciding factor inside of Bitcoin. What we're going to have to wait and see is how severe is this retrace going to be? Is it going to be 70%? Is it going to be 75% from all-time high? Is it going to be 80%? Or could it dip all the way to 3,000 and make an 85% sell-off? All of these are in the realms of possibility, guys. And if you're listening to a trader that's telling you that we won't see a sell-off this severe or this is the bottom, you really have to understand that there is a possibility that this goes lower than you're expecting, and you should have a well thought together and detailed plan if this is the case. Because based off of previous bear market, guys, this is something that happens. Now, if we take the past and use it as a reference for the future, basically we can guarantee we'll have an 80% retrace. I'm not saying that this is going to for sure happen. It's possible that we're at the bottom right now at about a 68 to 70% retrace. So this is what I'm going to be watching out for, guys. Remember, develop a plan. If Bitcoin does go lower, I am expecting it to have a final sell-off. We've yet to hit that capitulation point where everybody just dumps their positions. And that's something that has to happen at the end of every single market cycle. So this is what I'm going to be watching out for. We do need a strong sell-off to bleed the alts a little bit more. I've been looking through some of the alt charts, and a lot of them have some more downside to come. I believe that if we had one more strong sell-off, maybe 20-30% inside of Bitcoin, it'll capitulate the alts, and there's really going to be no more room on the downside left to go. And then I think we could see a strong spring effect where Bitcoin bounces back on the upside. But I mean, this is what I'm going to be watching out for. If we take the previous price, or if we take the previous bubble inside of Bitcoin, I'll show you guys the capitulation event, and then you'll kind of understand what I mean. So let's go here and compare. So from the all-time high of about 1150, 1160, 68% retrace puts us at about right here. Now, this isn't quite the bottom, but I guarantee you if you were back trading around this time, every single crypto analyst would have been calling the bottom right here. Because if we couldn't have seen this, that looks fairly bullish. That looks like a market cycle. That looks like it could very easily round out and then bounce on the upside. You have strong volume coming in, and it's basically exactly what we've been seeing with Bitcoin. We had this slow accumulation, descending prices, and then finally when it looks like we've come to the relative bottom, we have this new influx of buy volume coming in here. Everybody gets excited and they start buying up the panic basically. However, we had one final sell-off, and then that's indicated by this huge sell volume here. We had a price swing. We went from 68%, we went from about a 68% retrace down to an 85% retrace. So guys, that's a pretty severe retrace, 23%. That's no joke right there. So that's still what I'm expecting with the current bear cycle. I don't think that we've had a really big shakeout that we normally have inside of these markets. There's always one event where the price just sells off super drastic really quickly in a short period of time, and that gets everybody out of the market. They're scared, they're panicked, they're done with it, and then that's when the smart money comes in and accumulates. So I'm expecting a similar result here. As you can see, Bitcoin's bear markets have basically created the same fractal pattern throughout the entirety. I don't expect that to change anytime soon with the current bubble that we're sitting in now. And in fact, I do expect us to see lower lows. So let's go through before I wrap this video up, and let's find out and label the different points where a potential bottom could be formed. So we're currently sitting at about a 68% retrace. 70% puts us at about 58. So it's possible that my targets at about 58 to 48 become the bottom. I'm not saying that's going to happen, but it's a possibility. So an 80% retrace puts us at about 3,900. So that puts us about there. An 85% retrace puts us at about 3,000. So these are going to be my targets, about 70% or 75%. I think that puts us at about 5,000, right there in that area. So as you can see, this is actually lining up really identically with the market cycle. We have 80%, 75%, 70%. So yeah, we're basically at that 70% zone. These are going to be my targets on the way back down. You guys know where I have my buy order set. I've told you guys that every $200 down, I'll just cast another bid. So wherever this bottom goes, I'm going to be catching it. Thank you guys so much for watching this video. If you found this video helpful, always remember to leave a like, comment, and subscribe to my channel for more updates in the future. I would love to get some more subscribers, and so I can do a couple extra things that I'm really wanting for this channel. But until that time comes, I'm just working on producing good content so you can better yourself and become a better trader. I'll catch you guys in the next one. Peace out.